Happy Friday. Welcome to ATI Pro Media. We are powered by Advanced Trading. We've got a good show. We've got some important headlines. Argentina seeing some weather issues. We're going to talk a little soybean exports. Brady's going to give us his color on the cattle and feed report. We've got Tommy G in Nashville, so it's going to be Brady and Connor today. And so we've got some headlines, but let's call it Free for All Friday. If you've got some questions, anything you want us to talk about, drop it in the comments. We'll make sure to pop it up and discuss it and see where we're going to be. So with that, let's go ahead and take it to LaSalle Street, and I'll quote up the markets. So we've got Dees corn down 1.50 at 404. November soybeans down 9.5, sitting at 10.03. Let's hope they hold that $10 level today. Chicago wheat up 8, 573.5. Live cattle down a little bit on the move, down 90. October feeders down $1.30. Lean hogs up slightly, 22.5. Then we've got crude oil not doing a whole lot, 71 and 71.70, up a little bit. Nat gas up slightly, 2.59. We've got gold up 13.6, silver down slightly. The 10-year not doing a whole lot, and then we've got the Dow down 100. So with that, let's go ahead and bring in Brady Huck.
Connor,
Brady, how we doing?
I'm doing good. I like you. I'm representing my school.
People are gonna think we did this on purpose, but I promise you, we both just decided to rep our college shirts. So I put on the Illinois shirt. So today we got Nebraska, and so Brady, I don't know if you're familiar with Illinois football, but not a whole lot to cheer about, right? We have some glimpses, but good start to the season. We beat Kansas, which I think you're K-State. You're not a Kansas fan at all, right? Yeah.
Yeah, good job. Thank you, Connor. Thank you.
I really think it might be a wake-up call. This Nebraska team looks pretty dang good to me, but we'll see. I'll be watching it.
Yep. I think it'll be Nebraska looks solid to me too. K-State, we got BYU this weekend, and it's a late game. I'm gonna have to. I don't know. I'm gonna have to take a nap before the game just so I can stay up to see kickoff. I think kickoff's at 9:30 or something.
Oh my gosh.
Yeah, the late one.
Oh,
all right, Tommy, see you on Cow Guy afterwards. Yeah, Tommy did Cow Guy yesterday. Great segments, and be back on it again today. I think he's doing Market Day as well too.
Yeah. So basically, afternoon, tune into RFD TV, and there's a good chance you're going to see old Tommy Grisafi talking markets.
Yeah.
So with that, let's jump right into it. First off, we got a flash sale. I'll give you a clue. If you're listening to the show yesterday, we talked about how we haven't seen a meaningful corn sale to China for over a year. And so I saw this flash sale and I said, it couldn't be, could it? No, it couldn't. It's 121,000 metric tons of soybeans delivered to China for 24-25.
Hey, we'll take it. I think it's that time of year we need to see these. And, the U.S. continues to have a short soybean export window time frame. That, OND time frame is huge for U.S. soybean exports. And we need to see those flash sales, and we need to get them out the door too.
Yeah. In the next coming months, we'll pop up that seasonal. You said it best, where it's really a window of opportunity when we start talking soybean exports. We get into that December, January, February, where Brazil soybeans come online. It's a cliff where we start seeing what's shipped to China. And so we'll have to pay attention to that, right? We'll take every opportunity we can get. Joe, pop that headline back. It leads right into, we looked at corn exports yesterday. Let's talk a little bit about soybean exports, right? And so I think it comes to a surprise to no one that we're behind the 5-year average, right? Was it June, July, Brady? We were talking soybean exports, and it was the lack thereof, right? We were the 24-25 soybean shipped to China or that China had bought was a goose egg. It was zero. Now we're seeing a little bit above average buying, I think, this past month, but we've got a ways to go, I think.
Yeah, definitely some concerns. I think, big picture on just, the general appetite for the Chinese economy and where they're at with, buying beans, whether it's from the U.S. or Brazil, but it seems like they're importing less overall as a whole there. So, yeah. To me, we need to have a problem somewhere. We got to have Ukraine, South America has to have a problem, and then maybe we spur some interest from their buying. But yeah.
Right. So here, I have it here. 2 weeks in the marketing year, soy sales were at 5-year lows, down 5%. The other one is this is China's smallest share for the day in 19 years outside of the trade wars in 18 and 19. So a year ago, China represented 40% of all soybean bookings. So looking at that in chart form, you can see you take out the trade war, which I guess you could say for 24, 25, that's not exactly off the table, but significantly behind previous years. So I guess my hope would be is it's not a paradigm shift, right? We're not looking at less and less. I guess if we are going to have that shift, I want it to be that we're crushing enough soybeans in house. Time will tell if that's going to come to fruition, right? We probably
Mhm.
a little government mandates to get that biodiesel, um, renewable fuels off the ground.
Yeah.
But yeah, so a little bit significantly behind on soybean exports. The hope is we really pick up in the next 2-3 months, right?
Yeah. That gets my wheels turning here, and I'm gonna have to go do some research after this and ask some questions with people that are much smarter than me, Connor. But I wonder if, if you talk about crushing more beans internally, if will we shift to, exporting more meal versus actual beans? We saw that kind of
Right.
when
Yeah.
Argentina had a drought. We saw maybe some increase in actual meal exports versus actual soybeans. So I have to
Yeah.
go ask some questions to our research department after this.
Yeah, and to me, that was I would say that's the hope, right? If we really want to be more like in Argentina, in the sense Argentina exports very few raw soybeans. They're the number one exporter of soybean meal, right? Crushing crushing soybeans in-house domestically, adding that value and then exporting the finished product, that makes a lot of sense to me, right? That I think that's a good way to go. We've seen we've lost steam on this, but a year ago we would pop up those charts about how many crush plants are coming online in the next year, 2 years, 5 years. So things can change, right? The whole renewable fuels talk, it's really cooled, and I hope it ramps up, but time will tell there. So yes, I'd say that's the hope, right? It'd be nice to see a little bit less soybean exports because we're crushing more in house, but time will tell there.
Yep. Yep.
So
Well, hey, Joe popped up the link here. If you guys are interested in, reaching out to us or want some more information, you're interested in premium content, or you just want to talk to us about marketing or, opening a hedge account, you'll go to advancedtrading.com/ATI Pro Media. There's a contact form. You can fill out some information, send it to us, and we'd love, start that conversation and visit with you about your fall marketing plans, your needs, answer any questions you have. So head on over to that link and we'll talk about that.
yeah. So, other headline I have, we talk South America in general, but then the story has very much been Brazil. Where's that first corn planting pace? Where's their precipitation at?
Mhm.
Let's talk a little, just briefly, about Argentina. And so the headline I saw was Argentine river levels. Pop that up, Joe, if it's there. Did I put it up there? If I didn't, don't worry about it. But basically, we're at a historic low for that Argentina river levels, and it's set to really threaten their exports. Right, Parana River. I hope I said that right. Carries almost 80% of Argentina's grains and oilseeds for export. It's at the second lowest time of this year since 1970.
Hmm.
It's behind the only time it was lower was 2021, where they had that major drought, I believe. And so when we look at that, a fun fact I saw about this that I wasn't aware of is they have a unique advantage is that seagoing vessels can go all the way up to the river. So when we're talking exports, getting it from the interior to it, they can load vessels from that river and export. So it's looking dry. Corn planting pace. I saw Cesar sent us that link. Right on pace. Was it 10-12%, Brady? I can't remember. So corn planting is off to a good start, but
Mhm.
significantly low river levels currently.
Interesting. Yeah, another curveball that could come in and change things up, shake up the game a little bit, and impact U.S. export potential. You hate to root for other people to have problems to increase your odds of success and help your marketing, but I guess if there's a problem, Argentina, that's maybe a place I'd root for it to happen.
Right. But time will tell there. I did see those the GFS run adding a little bit of precipitation into Brazil, right? A little bit later than they would have liked, but still probably have opportunities. But when we look at those GFS forecasts, right, when it's that 12, 14 days out, we got to see it come to fruition. But they are adding a little bit of rain I really wonder if it's not adding to the soybean weakness right now.
Hmm. We'll see. We'll keep our eyes on that. Talking about GFS models and precip, though, I'm going to flash up a quick graphic here. Look at that precip over the next 7 days in wheat country, Connor. A
Wow.
lot of purple on the screen there over the next 7 days. We hope it comes to fruition. But when I look at that map, I think of grazing potential for cattle. And if we're drilling wheat on in that time, this time frame here coming up, and getting that moisture to put that wheat in a good spot, it, if we have good wheat grazing conditions, these cattle, they may stay out there longer. They may stay away from the auction barns. That may support fall prices for, this feeder cattle index. So keep an eye on if we get some decent rains here this weekend over the next 7 days in wheat country.
Yeah. I saw, and then also it looks, a big part of the corn belt. If we're going to be wet next week, we're going to see opportunities. This corn's going to dry down a little bit more. Beans get ready. It might be like holding back the floodgates, right?
Okay.
If you haven't started, I made a drive up to Northern Illinois yesterday, and just looking, not a whole. You get north of McLean County, Bloomington, not a whole lot of action.
Mhm.
Even around Macon County, we're still, much slower start than I would have previously guessed. We get a little bit rain another week into this fall season, we could really see it hit hard in the next couple weeks, I think.
Yeah, yeah. Well, hopefully there's a few showers that slow down harvest a little bit so that it doesn't get slammed and impact the basis markets too bad when this crop comes out.
Right. So, only other headline I have, and I think you should talk a little cattle and feed, is I saw that China unexpectedly left lending rates steady. Right, the market was expecting a cut. I saw something where Reuters did a survey of 39 participants, and almost 75% expected the rate cut to happen. And so we didn't see it. Right, they say it's coming. But I think Monday we said how many different banks, different countries had those decisions, right? We saw China left rates unchanged. Japan, right? We don't talk about it now, but 2 months ago we were talking about Bank of Japan every other show. They left rates unchanged as well. And so looks like the United States, we saw a historic, right, big rate cut. But then China, Japan, leaving it unchanged, right? Not sure
It,
what it means to global market. Yeah, go ahead.
Yeah, but it's interesting. We got so many eyes on the U.S. Fed decisions with rates, and then there's all these other, all those other countries, and what are they doing with rates, and how do they work? How does it all work together to impact, the value of the U.S. dollar? If we lower our rates, but Japan lowers theirs and China lowers theirs, what did relative across the board? What actually changed there? But interesting stuff going on. A lot of dynamics, a lot of outside forces.
Yep.
Let's dive into that cattle on feed report
Let's do it.
estimate. Got a report out this afternoon. Going to come out at 2:00. We'll do a post report. Post report dissect of what happened, what changes were there, but 0.7% higher on feed numbers anticipated as of SEP 1. Placements look to be a little bit down. Marketings look to be down, 3.5%. Marketings, we got a really good snapshot of what those look like going into the report because we get data for that month that really. So the difference is in placements typically. Will it be higher or lower than expected? But to me and the cattle on, I sent a video out to my customers and premium subscribers yesterday, quick little 4-minute video, because cattle had a banner day yesterday, big day along with stock market, actionable levels to go out and maybe do something. But outside forces really impacting the cattle market, Connor, supporting that thing with the NASDAQ up 500 points, the Dow up 600. We saw funds coming in and buying the cattle market, and open interest was up on cattle. But we'll see what gets printed in that cattle on feed report here this afternoon and how things change going forward. On the opposite side, if you're looking at the bear side of things, the choice cutout fell to below 300 yesterday. Kind of a psychological level there. It's down $7 versus a week ago, almost $8 actually. The lean beef market has been kind of fading here. And, that's weighing on the cutout. If the cutout's going down, that's going to impact packer margins and their ability to push live cattle purchases higher. And that just trickles down throughout the whole industry. But good opportunities out there. Got a nice, $14 rally on feeder cattle. Worth looking at doing some stuff. I don't want to be the last one holding the bag when the bull market rolls over and be holding the last bag there when it happens.
Right. I mean, we've talked about rate cut, how it affects the grain farmer. I mean, put on your next 6 months next year. If we continue to see rate cuts, whatever scenario you want to paint, is it safe to say, this move with the Dow up friendly cattle, or what's your opinion?
Yeah, I mean, you need a healthy consumer and a consumer with more money in their pockets to go out and buy beef. That's what we want to see. So I think that's a positive thing when you look at cattle placing them on feed and performing in the feed yard. Like putting corn in the bin. What's that corn got to do to tie up that cash throughout that time frame? Well, what's the same thing with a $2,000 feeder steer? What's it got to return you when you tie up that amount of cash over feed it out? $70-$80 a head is what they you can kind of pencil in for interest costs on that type of money for that time frame. So we've got to see those cattle perform and see that gain. But the cost to gain, it kind of ties in. I think we have a comment from Luke over there. The cost to gain has come down, and that's the cattleman's best friend right now.
Yeah, here I'll read it. You can answer. Cattle
Yeah.
rations are very corn heavy. Is there much place for bean meal in their feed if it becomes cheap enough?
Yeah, good comment, Luke. I think, the bean meal play to me is, more of a protein supplement on the cattle side of things. And that goes back to like your cow calf operations. They're feeding a lot of protein to cows. That corn, is starch and, energy to build fat and, marbling and finish those cattle out. So maybe not a direct replacement there, but cheaper meal does help, you know, the cow calf guy, and then cheaper corn as well. But both of those, and there's an abundance of hay out there in the country too. There's a lot of hay in, maybe not in every spot, but having cheap forage out there really helps embolden the cowboy to hold on to stocks and put some more pounds on.
Yeah, good stuff. Any other
Yep.
questions? Anything else you want to talk about, Brady? I called it a free for all. Okay, here we go. Russ, was the U.S. Fed rate directly tied to the upcoming election? Here we go. Especially since the rest of the world stayed steady.
I'm
So
gonna pull Tommy. You get the easy ones, Connor. This is yours. You get the easy ones.
I will say what I saw Jay Powell answer this question directly, and he said that his job is to support the U.S. citizen and do what's best for them in the American economy. Right? It is their line is they're apolitical. They are not influenced by election whatsoever. If you wanted, if you wanted to say it, it was a historic rate cut right before the election. It's not hard to connect the dots, but their story is it was not in any way related to the election. But I guess I'll let you infer, if we got 15 people in the room, we'd have 15 opinions on that one,
I
Brady.
think so. Yeah. Well, and then yeah. Yep. Tony says you're wrong though. Tony Dunker says yes, Russ, directly related to the election. I think so. I think that's
It's
what she's
hard.
saying there.
It was very good timing, is all I'll say, for a rate cut that was a little bit bigger than they thought, right? And so it's hard not to say that, but they're very their comments are very clear that it was not, it had nothing to do with politics with the election coming up. They thought they were kind of behind the eight ball. They didn't want to get behind, I think was Jay Powell's official word. So
Yeah. Well, I think you can spin it as, did you conquer inflation or is the economy faltering? But these comments are cracking me up reading these. The dialogue over there is kind of funny. Good
uh,
stuff.
Tony,
Yep.
I am reporting the news. I'm telling you what I saw Jay Powell said, and so that's all I'll say from there.
Yeah. It is what it is. But
Yeah.
we'll see. Going to be a lot of things changing, a lot of outside things that shake up the markets. And is it, put your tinfoil hat on and conspiracy theories? Who knows? I don't know. We can control what we can, and there's some things we just can't do a dang thing about, and we just try to make sure that those unknowns and those unexpecteds don't hurt us. And when you got opportunities with maybe some cheaper rates, um, things change, Connor. Things change.
That they do, and I got a feeling in the next 2-3 months they're going to change even more significantly, even in our little world of commodities. Right? We've got think of when I look at the soybean market alone, and we always talk about not doing our best not to predict the markets.
Hmm.
Let's talk in the next 3 months, major factors that could affect the soybean market alone, for good or for bad. Right?
Okay.
The
Yeah.
big, I'll say number one, the big debate is, was the weather in the United States good enough to finish for a record soybean yield? And so a lot of debate. A lot of people saying, no, this hot and dry August was not good enough, right? And so can we see yields come down? It's a possibility, absolutely. Number two, right? The number one biggest soybean producer in the world is going to plant their crop. Hopefully, they're hopeful in the next 2-3 weeks. They're going to start, right? And that's Brazil. They're seeing record dryness. Maybe the precipitation's coming back. But right now on paper, it's looking, production's something like over 10% bigger than last year. We're talking a really big crop. Time will tell how weather's going to affect it. And then number three, right, we've got policy, we've got exports. Are we going to see any type of tariffs being put on, even the hint of tariffs being put on, right? Just that discussion is probably going to send soybeans lower. And so I said three. I've got one more, Brady.
Let's
and so
hear
the
it.
other one, right, was that last week? Was it this week or last week where we saw the Ag Secretary Vilsack say that we are going to get rhetoric about renewable fuels? We're going to see it before the end of the year, before Biden is out of office. And so with that, are we going to see something that is really meaningful? Or are they going to kick the can down the road like they will? So that's just in the next 4 months.
Mm-hmm.
And to me, that's 4 factors that could really affect the soybean market. So that's really been fresh on my mind.
Yeah. Well, Joe and I were talking about it pre-show. We were talking about, just this chop in the market. You kind of get range bound, kind of lulls you to sleep, and you think, we're flirting on $10 beans here. I'm watching. Are we going to hold $10 beans here on Friday? Are we going to hold $4 corn? And if we break those levels of support, that'll embolden some of these bears to, maybe push this paradigm and change the price range that we've been in. But these markets can kind of lull you to sleep, and I think they've been doing that the last few weeks. Don't fall asleep at the wheel here. Got important marketing decisions over the next few weeks and months and years, actually. But what's not changing though, Connor? The odds of the Nebraska-Illinois football game.
What are those? I'm not a big gambler. What are those odds? I wonder. It's got to be.
I think Nebraska is an 8-point favorite, 7 to 8 point favorite here.
That feels fair. That feels fair. If you're an Illinois football fan, you can be hopeful, but also you got to be a little bit of a realist too. So with that, you got any closing thoughts? We can go ahead and wrap it up.
Nope, I think we'll have a special Kettle on Feed post report here after the close. Head on over. Send us your info. We love the interaction, the engagement. We want to know if you're watching, you want to continue the conversation and talk about risk management specifically for your operation. Send us a line. We'd love to talk to you. Thanks, Connor.
Yep. All right. Have a good weekend. I'll be cheering for K-State, and we'll see what Illinois does. So, all right. Everyone have a great weekend.
See you, Connor.
Thanks for joining us. We're here every day, 9 a.m. Central. Don't forget to like and subscribe. We'll see you next time.